of the new Year Wealth Accelerator. And tonight we're shifting from understanding to execution, which we started doing yesterday, and talking about the specific ways that we can invest with recurring buys, storing away our dry powder, building up that cash pile that we can then deploy whenever the stocks that we are looking for, the high quality stocks, we're talking about the Mag 9, they get below that 200, they start forming out a support base, they start making higher lows, we're ready to deploy that capital. So we went over all of that yesterday. And tonight we're going to get into swing trading. I'm going to talk specifically about one swing trading technique strategy that you can use. And I will say this, you want to practice these things first. I would not be doing you any justice if I just said, hey, go out and start swing trading tomorrow with real money. You want to practice this stuff first. And even for your investments, you want to write down a plan, think about it, and be methodical and approach it in a way where you've come up with a process for it, how you're going to go about it, selecting a brokerage account, determining how much money you're going to put away monthly, how you're going to store away your dry powder. You should have all that thought out, because when it comes to your money, again, you have to be protective of it. You have to be mindful of that. And so that's what I encourage you to do once you complete this course, is to practice these concepts first before applying them with real money. So tonight we're going to get into swing trading, order entries, then we'll review the class, the full framework, and I'll talk to you about some potential next steps if you want to continue to learn and expand on your knowledge, not just knowledge, but your skill and application of this information when it comes to the world of trading and investing. And so again, tonight is about execution and about rules, because it's not about knowledge in trading and investing. It's not about the technicals. That's one component of it. But I know lots of people who know charts, they know the technicals, but they are terrible when it comes to discipline and following a set of rules. And, you know, I work with traders as a coach, and what I sometimes see more often than not, especially early on in someone's journey, is they'll have very big wins. But because of those wins, they get this inflated sense of confidence to where they feel like they can't lose on trades. And then what happens is they stop following their plan, they stop following their rules, and then these big wins that they had go away and then some. And so it's about following a plan, it's about rules, it's about discipline, because it's not about knowledge. The market doesn't reward knowledge, it rewards you following rules under pressure. So we're going to talk about that here this evening. And I want to give you a shout out and some kudos. And I want you to just stop for a moment too and think about what you've accomplished and covered so far here in 3 nights. Now, I know we've gone long. I'll try to be, concise tonight, but I want to make sure that I get everything in. I did have to cut some things from the slides because I do want to make sure that we're not going for 2 hours, just to be respectful of your time. But just think of everything you've covered so far. We've talked about compounding, how investing and trading works. We looked at those examples with Apple. If you would have bought in 2019, and if you would have sold at $200, depending on how many shares you had at the time. We talked about, what if you put away $100 every month, $200 every month? We looked at that in terms of children, what could be built up. You learn how to read candlestick charts. We learned about the different time frames, what the different parts of candles are. You learned about the moving averages, the SMAs, the 50, the 100, the 200. You guys know that nothing good happens below the 200. You learn about high quality stocks, the Mag 9, and what deep liquidity means. We talked about that and why these are the companies that you should start with in terms of investing. And honestly, you guys have asked awesome questions. They're thought-provoking. They show that you're really thinking about this stuff. This is not something where you're just being a passive participant here, and you're asking things that it gets me fired up because it shows that you're truly interested in the stuff, and that's what it's all about. And, I felt bad last night because we couldn't get to everything. And what I'm doing right now, and I know I talked about providing you guys with resources in class. Tomorrow's email, since it'll be the final one since class is over, it's going to have a ton of resources in it. Trust me, I'm going to have plenty for you that will address a lot of the questions that you asked that we haven't had time to go through. Okay. And don't forget, tonight is the $1,000 giveaway. Randomly, I'm going to be picking a name here, and somebody will be selected, and you guys will win $1,000 to put into your brokerage account. And I'll talk to you about how that will work. We'll do that at the very end of class, right before we do Q&A and we finish everything up. So that is on the table. So one of you is walking away with 1K tonight. So best of luck to all of you out there. All right. And so, hey, I gotta throw my picture in here. We started the week with these goofy AI pictures, and I think yesterday it was kind of a dark, dingy photo. It was a cat, a dog, and a moose chilling in the basement, and the dog looked like he was down on his chewy position. But I was like, let's brighten it up here for night number 4. So they're back, but the one dog is gone. We got a retriever here in this picture, and they're chilling poolside. It's sunny out. They got their glasses on, and the moose has a Courage trading shirt on, which, man, that looks good on him. All right, we got the merch going. They're all happy. They got a winning trade here on their MacBook, so they're all feeling pretty good. So I wanted to start here, and I also wanted to say, when we do the $1,000 selection at the very end, we are going to have 2 other prizes that we're going to do right before that. One will be a $50 Amazon card. Another will be a $100 Amazon card. And then it will be the $1,000 for your trading account. So there's actually 3 prizes tonight. Those will be saved for the end. So keep that in mind. It's all completely random. I have all of your names in a random name generator, and it will spit a name out, and that's how we will select the winners. All right. You never seen a moose wolf with a toenail? Oh, I just saw that right there. Yeah. Oh yeah, there is a random star. Yeah, that's to remind me. I wanted to mention those gift cards. That's why it's there. At least the computer is the correct way this time. Yes, it is. Yep. All right, there we go. We got a bright vibe. Oh, and I got to fix this because I didn't do this yesterday. I didn't do this till late. All right. See, I remembered. All right. Perfect. So that is set. Okay. Well, here we go. Here's our framework, right? This is what we've been working with: capital, trend, entry, risk, time. We're going to stick with that here again tonight as we begin to talk about swing trading. We talked about how our investing strategies fit into this, and now we're going to move into the swing trading category. Okay, so swing trading. Remember, swing trading is something that we use for short-term profits, and it is anything that lasts, a trade that lasts longer than a day, right? So a day trade, you are in and out of the trade in between market hours of 9:30 a.m. to 4 p.m. Eastern time. A swing trade is a trade that goes longer than a day. If it's 2 days, guess what? It's a swing trade. And a swing trade could run a couple days. It can run a week, a few weeks, a couple months. The key is it's an extended period of time. And when we're swing trading, we are trading with the trend. That is the number one rule when it comes to swing trading. You have to trade with the trend. Now, you can short stocks, but I don't recommend shorting with swing trading, especially when you're starting out. Day trading, different story. That's a whole different concept. That's a whole nother set of learnings. So we're not getting into that. We're talking about bullish swing trades. And again, we're trading with the trend. And what we're looking for in terms of taking a swing trade is we want something that is going to be in that bullish trend. And we know that means being above the 50, the 100, and the 200. And that means that there's a tailwind behind it that's pushing it higher. And we know that when a stock falls below that 200 simple day moving average, where nothing good happens, it's the pits, right? We go into defensive mode. We don't buy right away for our investments. We don't catch falling knives. We wait for support to be built out. We wait for those higher lows, and then we attack. And so the trend is the filter when it comes to our investments, and then when it comes to swing trading, and everything else is noise. Okay. So what you can do with swing trading, and again, you could start with any amount of money. You can use it to generate short-term profits off of stocks that are in bullish trends, that you can then take those profits and then reinvest them into your recurring investments, or put it in your dry powder account, or you can use that cash flow for something else. But again, you have to practice these techniques and strategies and concepts first before just immediately going live with them. All right, so now, when it comes to swing trading, there are 3 particular lines and 3 elements that have to be a part of every trade that you take, every swing trade that you take. And the same holds true for any day trade that you take. But again, we're just talking exclusively about swing trading. And those 3 components are going to be what is known as the entry, the stop loss, and the profit taker. All right. So when we talk about our entry, this refers to where we are getting into the trade, where we are entering the trade. It's very self-explanatory. It's very straightforward. When we talk about our stop loss in a swing trade, this is where we make the decision that, hey, if the price action comes down to this area, our trade idea, our trade thesis is dead. It's no longer has the life left in it to move. And that's based on us reading the charts saying that, hey, if it comes down here, it's broken support. The chances of it running and hitting my target will not happen. And so that stop loss, what it does and why it's so important is because when we determine at the outset that, hey, we don't want to lose any more than $50 on the trade, when that trade pulls back, or if it drops into your stop loss price area, that means that you're only going to lose $50 because that's your maximum loss. So that's where that stop loss is super important. You cannot trade, whether it's swing trading or day trading, without a stop loss, or you will risk financial ruin. Now, investments, different story, because you're in it for the long haul. But with trading, you must have a stop loss. And then the third component of every swing trade is you need to have what is known as a profit taker. And this is where you're identifying, all right, what is the potential of this trade in terms of how high it can move from a conservative perspective? And that is where you're going to take your max win. And I'm going to show you how to identify these areas on a chart. But essentially what we're doing with these 3 things, the entry, the stop loss, the profit taker, is we're determining where we're going to get in, where we're going to protect ourselves to ensure that we don't lose any more than what we've decided to from the outset, and what our target is in terms of what we want to profit. And this just ensures that we're defining the risk, because if the risk isn't defined, the trade doesn't exist. So we have to make sure that those are in place. Okay. All right. We can take a drink of water. Give me 1 second, guys. I tell you what, just thinking back to when I was in the classroom prior to being a principal, you take for granted what a strain it is on your voice when you're talking all day. And that's something teachers, I give them so much credit, because, you know, if they have 5, 6 classes that they're teaching during the day, it's exhausting on your voice. And so I'm kind of getting a little bit of a throwback to my teaching days here And so if I have to pause to drink water, you know why. It's just from the talk. I don't do a lot of talking other than my videos. It's a simple life for me right now, but this is a lot of fun. But anyway, so here's the strategy. We're still talking about swing trading here. All right. So this strategy, and you can come up with whatever name you want to call it, but an easy description for you guys to remember this. It's just a bull trend retest strategy. Okay. What does that mean? We're in a bullish trend. It's moving higher. You guys know that in any type of a move, if you're going upwards, there's typically going to be a retest, which just means a little bit of a pullback like this. And essentially what we're looking to do is get in on that retest and then ride the trend up higher, obviously using indicators, entry points, which we'll talk about here in a second. So that's what we mean by bull trend, right? The trend is higher. The retest, it's the pullback, and that's the strategy, the bull trend retest strategy. So what we're looking for in this strategy, we want to identify stocks that are in a confirmed uptrend, which you all know we're above the 50, 100, and the 200. All right. And what we're looking for is a pullback down into the 50 or the 100. All right. And we want to see that the price action is stabilizing in that area, meaning that it's not just shooting through it. It's moving sideways. It's consolidating. It's building pressure. And then at that point, we want to see the buyers come back in. And then what our signal is going to be is above that 100 or the 50, wherever we want to get in. We're looking for a bearish candle that is going to be tight to the 10-day exponential moving average, which I'll show you here in a second. I'm going to model all of this for you on the screen. And our entry is going to be right above that bear candle. All right. And I'll show you how to do that as well. When we set our stop loss, it is going to be below support or the most recent low, so that we have room for the trade to work. Meaning if we do get a further retest, we're in a space where we're not going to get stopped out right away. It's got room to pull back and then run. And then our target, we're going to be looking for previous highs, nearest resistance, and we're going to come in a little bit lower than that. So we have a higher probability of hitting that target. And then in terms of our risk to reward, we want to look for a 1.2 to 1. And I'll show you what that means on a trading view chart. And so when we put this all together, this is the strategy that we're using for our swing trades. And again, you guys, I'll be sharing all this with you. I'll share the slides so you have it, but I'm going to show you what this actually looks like on a chart. Okay. So the chart we're actually going to look at to exemplify this for you is going to be NVIDIA from 2024. All right. And so really quickly, you guys know by now that the orange line is my 50. Here's my 100. Here's my 200. Guys, when you look at this chart, can you tell me what trend are we in and how do you know? What trend are we in and how do you know? Bullish trend, because we're up above all the moving averages, right? So that's the one way that you're really filtering the charts that you look at to see, hey, is this in a good spot for me to, or is this eligible for a swing trade? If it's in a bullish trend, yes, it is. Now, let me ask you some more questions. As this thing's pushing up here and we get up to this price area here, would right here be a good place to get into a swing trade? Would that be a good? No. Why wouldn't we want to get into a swing trade? Too far above the moving average, right? It's too extended. It's too expensive, right? Yes, it's too high. And here's another question. Well, let's go back to what else we talked about. Do you want to buy here for your long-term investment when it's extended like that? No, we want it cheaper. We want bargains. We want deals, right? We don't want to But going back to the swing trading piece, it's in that bullish trend. But now that it's up, we're saying, hey, all right, I'm going to watch this thing for a pullback and a retest. All right. So here's what we're going to do. We're going to hop over to TradingView. We're going to look at this exact chart, and I'm going to show you how to set up a swing trade using the strategy that we just talked about. And so I can model this for you. All right. So let me stop my share here. Let me bring up my chart. Bringing up the chart. I talk to myself a lot too. Sometimes I'll be doing stuff around the house, or like I'm on the computer, I'm looking at charts, and my wife is like, who are you talking to? I was like, well, I'm just thinking out loud. I have to hear myself. Today she's just like, you're weird. I was like, all right, you should know that after 20 some years. All right. What was I doing? I get to show the chart. All right. Did I just see somebody said their husband has an imaginary friend? Hey, I do too. I have lots of them. All right. I promise I'm going to share this chart. I'm sorry. I'm just getting distracted here. Share. All right. There we go. Again, I have to confirm that you guys can see that. Yep. All right. Cool. All right. So this is just that NVIDIA chart that we were looking at. So we have the uptrend that's happening here. And what we can see is we know, all right, we're not buying right here. NVIDIA was at all-time highs at this point. We're waiting for a pullback, right? And we know with this strategy, we're looking for pullbacks into the 50 or even the 100. All right. So we're watching. And actually, here's a cool thing that I could show you here on TradingView. If you go up top here and you see this replay button, if you click this button and you come down to the screen, you can hide all of these candles. And so what you could do is you can simulate what happens. And so you could practice trade with historical candlesticks, right? And so that's what we're going to do for this example of a swing trade. So here we're watching it, we're screening, we're looking at our Mag 9 stocks, we're looking for a swing trade. All right, Jeremy said this is what to do. All right, so we're watching. It's not ready yet. I got to be patient, but we're keeping an eye. Let's watch that 50. Let's see if NVIDIA can retest that 50. All right, came down a little bit. Inside candle, sideways doji, decent volume, dropping a little bit lower. Volume's decreasing. Oh, we got a nice little drop. All right, we're getting closer to that 50. All right, things are getting good. We're watching it. We're not ready yet, but we know that it's coming down to that 50. There could be an opportunity here. All right, we got another inside candle. That's a bullish harami, but that's a pretty big red bearish engulfing candle here. What's going to happen next? Ooh, the bears come right back in. But notice this volume is declining. Interesting. So a thing about volume is as price is going up, you want to see the volume increase with it, because that shows you that there's reliability of the move and price action. The same thing with a move down. You want to see the volume increase with the move down. That gives reliability to the price action. When you start to see volume thin out and the price is going higher, that price is not very reliable. The same with moves down. So just keep that in mind. They call that divergence. Okay. So let's keep going. Uh-oh, we're getting close. We're getting close. So we're getting ready, but we're not ready yet. We're being patient, right? You don't want to just rush into a trade. You have to be patient. We're watching. All right. What do we get next? Oh man, this thing is pushing. Is it just going to go right back up? Another inside candle. All right, down we come. Can we get that 50? Give us the 50. Ooh. All right, we're close. But remember, what we want to do is see some sideways movement along that 50. We don't just want to rush into the trade, okay? So what I might do at this point when I'm watching this chart is I'm going to come over here to the left-hand side on TradingView where this says forecasting and measurement tools. And I'm going to click this arrow and see this option for long position. I'm going to click on it and I'm going to drop this on my screen. And so now what this does is this gives us an entry, this line right here. We're going to put that where our entry is going to be. And remember, we're going to be looking for a bear candle above the 50 or the 100 for our entry point. And for our stop loss, we have the bottom of this profit and loss tool that we can drag to wherever that's going to be. We can drag this to wherever our profit's going to be. And that's how we track the trade. Okay. But we're not ready to get in yet. So we're still watching. All right. Ooh. All right. So look here. We pulled down into that 50. Okay. Could this be a good spot to attempt a swing trade? Yes or no? It doesn't have to be perfect, but could this be a good spot to enter a swing trade? Yes. All right. So now here's how we would go about setting it up, because we have a bear candle above that 50. We have a retest. We are going to set up our entry to be above the wick of this candle. All right. So what we're going to do is we're going to drag this tool so that it is 1 penny above this candle. All right. And so when we go to put our order into our broker, we're going to use a stop limit order. And for the stop price and the order price, we're putting the same exact price in there. Because what that tells to the market is that, hey, we want in this trade, but only if, and only, no exceptions, the price exactly hits 86.25. So when you set that stop limit order and you put the same price in for the stop and the limit, that's telling the market that you want in at that exact price. Now, here is why I was harping on stocks with deep liquidity, because a ticker like NVIDIA, there are orders at every price level. When you set a stop limit order, you more than likely are going to get filled at that price. When you start dealing with stocks that are not as liquid, it's going to be difficult for you to get filled as quickly, and sometimes you can get skipped. But the Mag 9, you won't have any problem with that. So now we have our entry set up. Okay. So now the next thing that we want to do is think about our risk and look at, okay, what is a most recent low that we can identify where the price more than likely will not fall to? Okay. And we want to look for a good support. And here's the thing with this swing trade, you can use a pretty wide stop. Right. So I'm going to look at this and see, all right, where is the most recent significant low? So if I'm looking over here to the left, I see this pullback that happened here from February 14th, Valentine's Day, into the 21st. So this low here at about 65.96. All right. So what I'm going to do is move and set a stop loss that's actually below that low. So my stop loss will be at 65.70. But remember, whenever we're setting a stop loss, that's going to help us determine how many shares that we're purchasing for the trade, which is going to be dictated by what our risk is. So if we have a $50 risk, that's going to help us calculate how many shares that we purchase so that we aren't losing any more than $50. All right. So now we have our entry set, we have our stop loss set. And now we want to set our profit taker. Now here's the challenge with this one is we want to go for 1.2, right? So if you look in the middle of the box here, do you see where it says risk reward ratio 1.2? You want to drag this box to where it says 1.2. All right. Now, typically what we want to see, and again, we're just using this as a hypothetical to show you how to set up a trade. But when you're setting up a profit target, you want to have seen that the price has been there before. Okay. That there's historical precedent that the price action has touched that area before. That's not the case here on this NVIDIA trade, right? But again, I'm trying to model this for you so you see how this works. All right. So now we have the three parts of the trade set up. All right. And let's just go through the strategy so far. We're in a bullish trend on a Mag 9 stock. We got a retest into the 50. And since we saw that, we set up an entry right above that candle. We have our stop loss set. So if this trade triggers, we're protected. We can't lose any more than we decided we would lose from the beginning. And we have our profit taker set. Okay. So here's what has to happen now. In order for us, because we could set this trade up in our broker the night before, right? So this could be set and then we're just waiting to get filled. But what has to happen here is the price action has to cross our entry line. If it crosses our entry line, we're going to get triggered into the trade. So here's my question to all of you out there. If this next candle comes in and it's below this line, did our trade get filled? Yes or no? No. So my next question, if it doesn't get filled, can we adjust our entry? Yes or no? Yeah, you can adjust it. If it doesn't fill our order, can we cancel the trade and say, I'm not feeling good about this now? Yeah, right? You have all those options at your disposal. And this is the beautiful thing about planning these trades out in advance. So now let's just walk through. Again, I'm just trying to model this for you. All right. So let's just go ahead. Oh, wow. Thank God we didn't get into that one, right? So what we could say now is we are not taking this thing. We're not touching it, right? But we're not triggered into the trade. So we're good. So we might say, you know what? This is fine. Nvidia's still in a bullish trend. It needs this pullback. We're gonna let it ride. We're gonna leave our entry there. Let's just go through it. Oh, and what happened? What concepts at play here, guys? So it dropped below that 50, and then it retested again. What is this 50 serving as right now? Resistance. Yes, right? It got rejected there. So we know that as we watch the price action play out, that it's got to break that 50 if it's going to start making a push higher. All right. So let's see what happens next. All right. So a little bit of sideways. Oh, are we in the trade now? Are we in the trade? Yes, we are. Okay. So Raj, brokerage accounts do not allow this kind of trading. Yes, they do. So interactive brokers, Thinkorswim, the sample trade entry that I'll show you today is going to be through IBKR. It's what I use. So it's what I teach. And I don't want to teach a broker that I don't use every day. And I use interactive brokers every day. So I'm going to teach you guys what I know, but a lot of students that I work with use Thinkorswim. I do have a Robinhood account and I used to trade in that, but that was me learning. And I have Robinhood accounts now that I use for investing, but interactive brokers, you can do all this stuff. All right. And I'm sure there are other, I think somebody that I work with has an E-Trade account that I would venture to say that your broker probably has these features because the majority of them do, or you just, and I'm not trying to be offensive here, you might not have the best broker, right? Because there are a lot of good options out there. All right, so I think Webull, yeah, has that. Schwab, yeah. A lot of your brokers are going to have it. You just have to just look up a tutorial on how to find the different types of orders. It's not hard, but it's going to be a little bit clunky until you figure it out, but it should have those features for you. Okay. So let's go back to this trade here. So we're in the trade. So here's a question for you guys. Let's say we had 100 shares. We're up $1.48. So we're up $148. Could you, if you wanted to, exit this trade right now and take your money and walk away? Could you do that? Yes or no? Yep, you could. You could be done and be like, hey, I got 148 bucks. I'm going to take this. I'm going to pay my cell phone bill. I'm good. You could do that, right? You don't need to stay in it. You could completely shut it down right there. All right. But let's let this play out because I'm going to show you some other things you could do. All right. So we get another candle that comes in here. Anybody know what type of candle that is that came in? Hammer candle. It is a hammer candle. Buying pressure. And guys, where did this thing where did the price action drop down to and where did it bounce? Well, we're getting dragonfly doji coming in there. Look, we're getting some candlestick masters in here. Yeah, bounce at that 50, right? And I didn't add the 10 on here. I'm going to have to do that. I'll do that here in a minute. All right, so let's just keep playing this out. Ready? Let's go to the next candle. We came back down, right? Oh, no. What's happening now, guys? What's happening now to the trade? What's happening? We're losing. Do we panic and say, no, sell, 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 close it out, close it out? No. Is that what we do? No. You say, okay, we're down. All right, we have 100 shares here. We're down $321. Okay, it's feedback. All right, let's let the trade play out. This is a swing trade. With swing trade, you have days to weeks to months. All right, let's go to the next one. All right, where did we get rejected at on this candle? We execute our plan. We got rejected off the 50, so that 50 is now resistance again. We're nearly right back to our entry. We're down 43 cents. We're down $43. What do we got next? Oh, we got a gapper. We got a gapper, guys, right? So this candle came in. We closed above this upper wick of this candle, so where that selling pressure was, so we might get a little bit of a squeeze here. Here's a question. Can you close this trade out, take your money, walk away, and be done with it? Yes, you can. Nothing says that you have to wait for it to get all the way up here to your $24 price target, right? Let's see what we get next. Oh, man. We're up $589, right? So check this out. Here's what we could do if you want to. When you're in a swing trade, so your stop loss is down here. This is good trade management. And I always say to people who are just starting out in trading, lock in your gains early and protect your gains early. So what you can do is you can move your stop loss. And what we're going to do is say, all right, we got this nice push here. The bulls are probably going to protect the open of this candle. So we're actually going to move our stop loss. And I'm going to type new stop loss. We're actually going to move that stop loss right below the wick of this candle. Okay. So now here's the beautiful thing. If this thing dumps, right, we're getting stopped out for a small win. We can't lose. So we can go about our business. This is set up in the broker. We could go mow the lawn. We can go spend time with our family, do whatever it is that you want to do, and you're protected. You can let it run. But here's the thing. If it doesn't pull back and it keeps going, you're still protected. You're still letting the trade run for you, okay? So you can manage the trade by moving your stop into the money. And that's just called active management of the trade, all right? So let's keep going. What happens next? Ooh, we came close to getting stopped out. Look at that. Look how close we were. We didn't, though. We're still in the fight, but I'm going to say, what do you guys think happens next? Do you think the next candle is stopping us out, or is it going to bounce? What's going to happen? All right, we got to bounce out, bounce. Oh, all right. So we got that lower wick there. The buyers came in. JD says anything. All right, let's see what we get. What do we got? Ready? Ooh, we're still in. We're still in. Yeah, we don't have the MACD or the RSI. It's just simple volume chart. We're keeping it simple. All right, we're still in it. What do we get next? All right, we got stopped out. So here's the cool thing, right? Let's measure this out. Up to that stop, we made $258 off this trade with the 100 shares. Not bad. But that's how a swing trade works. Now, here are some other things that you could do to actively manage the trade when you're in it. Let's say that when this thing ran up here to 92.24, how much was that? Let's see. 595. You could have said, all right, you know what? I'm going to sell 20 of my shares and lock in a partial. So you could have sold 20 of your shares, locked in that capital, and then move your stop loss. So you not only got paid at a higher price for selling a handful of your shares, you have that money, but then it pulled back and then you got paid again. So being in a trade, when you set up a trade, that doesn't mean that you're just waiting. All right, well, hey, here's my stop loss and here's my profit taker, and I'm just going to let it do what it's going to do. You can adjust as information is coming in. You could take partial profits. You can move your stop loss into the money. You can actively manage the trade. So those are all things that you could do. So let's see here. Yes, stack the wood for sure. And that's the thing with trading too, is a lot of people are out there trying to hit home runs and grand slams with trading. And that is the path to financial ruin. And you will wreck your confidence if you're always trying to do that. Just get on base, get a single, right? Get walked, right? And over time, there are 252 trading days a year. Just if you could be positive, eventually those singles will turn into triples. You'll get a home run every so many months. And if you could do that consistently, you build your confidence, and you do this year after year after year, you build your knowledge, your skill set. What could you do 3 years from now, 5 years from now, 10 years from now? So you've got to think long term with this stuff. And you can't get caught in the trap of thinking, all right, if you're going to pursue this, that you got to do it right away. Because that, just being completely candid, that is a recipe for disaster too. It's just like, think of anything else in life that is worth it. You have to pay the price. You have to be willing to give yourself to the thing and struggle a bit and suffer a bit. But on the other side of it, if you're willing to do that, that's where the rewards are. So that's the swing. Now, the one thing I wanted to add here that I didn't is the 10-day exponential moving average. So I'm going to show you how to add this. So if I just type in moving average, see here where it says moving average exponential, you could favorite this one, and I'm going to click on it. And I'm going to change this to 10, and we're going to make this black. Boom. And this is our 10-day EMA. All right. And so this is really what you should be using for your entries for swing trades. And really quickly, let me just give you, and we talked about this the other day, but an exponential moving average, this gives greater weight to most recent price action. All right. And so this black line is going to be a more relevant recent price average versus the SMAs. Okay. And so how we're going to use them is for entries and swing trades. So for the example that I gave, I had us setting up the initial entry here, but what we actually want to do is wait for a bear candle to close above that 10. All right. So this candle would be eligible and your entry would be right above. So if this was our entry line, you would be right above that candle, or these two candles here. But again, we're looking for that pullback. And essentially the thinking is that you have bears or selling pressure trying to press the price down, and they could not press the price down below that 10-day exponential moving average. And so what it does set up for is a trap, meaning that if we're entering above that candle, when the price gets above that candle, what it does is it squeezes those sellers, right? Because sellers profit as the stock comes down. And so if someone's shorting, they have to buy the position back to close their position. And when they buy, it pushes the price back up. Okay. So that's why we want to enter above that bear candle that is above the 10. So let me just review one more time all of the steps here. All right. And again, you'll have this video to refer to, but one, identify stock in bullish trend and focus on the Mag 9 until you get more experience because of the liquidity piece. Wait for a retest, pull back into the 50 or 100. All right. Then we want to wait for a bear candle to close above the 10. and the entry is above. Let me pull this over here. Above. I spelled that incorrectly. Above. All right. Bring this back up here. 4, set your stop loss. 5, set your profit taker. And then I'm just going to put here number 6, manage the trade. All right. That's the strategy. Now, let's see what played out here with, and I remember this time frame, so it's not really fair, but just to see. All right. But again, bullish trend, pullback, nice little pop. That's a strategy. Questions. Does that feel accessible to you guys? Does it feel confusing? How can I help clarify? I just want to get a gauge for where everybody's at. Okay. How do you stay in a swing trade after the market closes? So you own those shares. And because you have a profit taker and a stop loss set, the trade will not close until your profit taker is hit or your stop loss is hit, or you manually exit the trade. When you're setting up a profit taker and a stop loss, they're automated orders, which means that you don't have to sit there and monitor it. As soon as the price hits that, it's going to close the trade. And the beautiful thing about it is if your profit taker is hit first, it cancels the stop loss and you just capture the profit. If your stop loss is hit, it stops you out for your loss and it cancels the profit taker. It's what is known as OCO, order cancels order. So when you're in a trade and you own those shares, you're in it until the position is closed. Okay. So I see here, definitely need practice, and you have to have practice and repetition with this. Yes, I do not advise you guys just go out, like I said, and just start doing real money with this stuff. That's the stuff that I did. And there's a reason why I'm telling you not to do it, is because it's not a good idea. Practice. Take your time. You don't need to be in a rush with this stuff. Okay, nice refresher. 10 a.m. May. I was thinking that last crit. Yep. Yeah. Yes. Need more practice and study. Okay, good. How did you initially choose your stop loss amount, previous support? So your stop loss, so there's a calculation that you will do for, so you have to decide from the outset what your maximum risk is going to be on the trade. So if it's $100, then you have to do a calculation, which is entry. So let's say, for instance, if we were getting in, and I'll do this for you guys real fast. If you're getting in right above this candle, this bear hammer candle here at 96.16. So that's our entry price. Okay. So it's entry minus stop, whatever that number is. So our stop loss, and this is just a hypothetical here. I'm not setting up a high quality trade. This is just to model this for you. So our stop is 83.78. So 93.16 minus 83.78. That is $9.38. Now, if my risk is, let's say it's $200, what I have to do is divide 200 by $9.39. And that's going to tell me how many shares that I need to purchase for this trade. And so in this case, it's going to be 21.3. We just round that down. That's 21 shares. So what that means is I will buy 21 shares for this trade. If this trade does this, boom, and hits my stop loss, I cannot lose any more than $200 if you use that calculation. And then for the profit taker, it's just the reverse, right? So that's a risk to reward ratio of 1. We go for 1.2. Our profit is going to be 1486. 21 times 1486. That's 21 shares. Our profit would be $312. Okay. So you have to calculate that first. And again, like the slide said earlier, if you don't know your risk going in and that's not set, you're not trading, you're gambling. And you gotta, the thing about the markets is if you do this in a careless way and you don't respect the markets, it can ruin you. You have to approach it the right way with the risk in mind, right? That always has to be there. Let's see, any brokers out there have full access paper trading stuff? Yeah. So, I mean, you could even use TradingView. So TradingView, if you click on trading panel, in replay mode. All right. I'm going to close this out here, guys, because I think we've gone over that pretty well. Close this, leave. So when you click on trading panel, you see where it says paper trading. You can paper trade right here in TradingView. I don't like paper trading in TradingView, but I will say enough. I'm not an affiliate of Interactive Brokers or anything like that. It's just what I recommend to everybody. My mom has an Interactive Brokers account. So does my wife. My wife has her own trading account, but I tell everybody to get Interactive Brokers. It takes time to learn. And I'm sure if you get it, you're gonna be like, this is weird. It's wonky. It's not super user friendly. I use the desktop trader, which is a little advanced. Their web-based version is pretty intuitive and nice, but the desktop version that I use can be, because for trading with options and all that, it's a little bit more advanced, but just in terms of reliability, it's great. And their paper trading system is phenomenal. All right. Yeah. So I always use the 1 day time frame for swing trading, but I also look at the weekly and the monthly as well. Guilty of gambling. Yeah. I'm not going to sit here and say that I didn't have my days early on where I was doing things that's how you learn, right? But if you want to be in this space, if you want to survive and not just survive, thrive in trading and investing, you have to take protecting your capital very seriously, because in order to live the trade another day, you have to protect it. And that doesn't mean there aren't times to take shots, because there are. But again, that's a whole nother conversation. Yeah. So the calculation one more time. And again, this is in the video. It's just entry minus stop. And then whatever that price is, you're going to divide that into whatever your risk is. So if your risk is 200, divide that difference into it, and that will tell you your number of shares. Okay. All right. So give me a 3 if that was helpful. That's probably a better thing to ask. Can I get a 3? All right. I feel like that was, I went a little long there. I don't want to confuse you guys. All right. So let me come back to the slides here. Where are we at? Oh my word, 9:28. No, where's the time going? All right. So I got to speed this up a little bit. All right. So I went over the swing trade strategy, and I'm going to show you quickly how to place orders. This is just going to be very simple, just because of time. I want to be respectful of your time, but I'm going to show you. So we talked about a stop limit order. This is where you're saying the price that you want in, and you're dictating to the market. All right, this is where I want to get in, right? And that ties into our framework of entry. We're using stop limit orders because, especially with the strategy that I'm showing you, you want to get in when that price goes above the top of that candle, the wick or the body, so that trap occurs, right? So that's why we use a stop limit. Our position size, right? That's based on capital. It's based on risk, which we talked about in that framework. And then where the stop loss and profit takers go, that's part of a bracket order. This is structure. It's not hope, not gambling, right? And I'm going to show you what this looks like in a broker. Okay. So here's Interactive Brokers. Now, this is the desktop trader, which this looks, very MS-DOS, Microsoft Windows 1995-ish, right? But it's faster. It's designed for traders, but the web-based version is much, much easier to use. But it's very simple how you set this up. So your initial order, you have a buy button and you have a sell button, right? You use the sell if you're shorting, but in this case, we're just going long here. This is a bullish swing trade. We just click the buy button. And then we have our quantity here. We're just clicking on this box and we're typing in the number of shares that we're going to purchase for the trade. All right. And then we click the next box is the order type. In this case, we want to stop limit. So you can see you get a box for your limit order and for your stop order. We put the same price in there because we are dictating, we are saying, market, we don't want anything to do with this trade unless you give us this exact price. And because we are using deeply liquid stocks like the Mag 9, we are going to get filled. We are not going to get skipped. When you trade illiquid stocks where there's not a lot of liquidity, you're not going to get filled, right? And that's how simple it is to set up the order. Now, here's the next step, though. This is where the bracket order comes in with the profit taker and the stop loss. So in Interactive Brokers, you click this little plus button here for advanced, right? And when you click this guy, here's what happens. It takes you to your bracket order. Now, you're probably thinking, what in the world is all this craziness, right? But here's what you do. You click bracket order, and this attaches a profit taker and a stop loss to your order, okay? And our profit taker is a limit order. So this is going to say, hey, we want to sell at 237.59 or better. Meaning when it hits this price, 237.59, it's either going to sell it at that price or at a higher price. So we put that in there. And then our stop loss, we put in as a stop order. And this just says, hey, as soon as that price hits 235.59, get me out. So again, because you're trading highly liquid stocks, more often than not, you're going to be exited right at that price unless there's something crazy that happens and you're going to be filled a few pennies to maybe 10 cents below what that order was. But the stop order says, hey, something's happening that's wrong. You need to get me out of the trade. So that's why we want to set it as a stop. And then here's all you do. You put your numbers in there. You make sure that the bracket is clicked. You hit submit. Your trade is now active. And the beautiful thing is you can monitor it. And like we just walked through that practice trade there with TradingView, is it, if it doesn't trigger right away and something changes, something happens in the markets that you don't like, you could cancel it. Or the other thing is you can adjust your entry and then you just update your numbers and hit submit or update the trade. Now, I'm not going to go into, because we don't have the time, the different types of orders, all those things. But what I'm trying to show you is these fail safes are in place in brokerage systems where you can protect yourself. The stop loss is so important because this ensures that you don't lose more than what you have decided at the beginning that you didn't want to lose, right? And your profit taker ensures that, hey, this is where I feel like the stock can run based on a chart. If it does do that, it's going to cash you out at that spot. So these are all tools that you can use to your advantage. A lot of people, I don't want to assume, but a lot of people think that, with trading, you have to be sitting there the entire time watching it. No, you set it and then you go and especially swing trading, you can go do your thing. You don't want to sit there and, here's the thing about trading. You don't pursue trading and swing trading and day trading so you can sit in front of a screen all day. For me, is because I day trade every day. I trade from 9:30 to 11:30. That's it. Right now, I study a lot, but the amount of time that you're actually trading is very small. And the beautiful thing about swing trading is you set these trades up and you can check in once a day, once a week if you want to, right? It's a less intense, less stressful type of trading. Okay. All right. Man, these things just go too fast. So bringing it back to the framework, capital, how much you have to deploy for your investments, how much, if you want to swing trade, how much can you utilize for swing trading? right? And again, you could start with any amount. It doesn't need to be a lot of money. And like I said, I'm going to drive this point home. Start with, you could just, you could trade on TradingView, just do practice trades, right? Use that P&L tool that I showed you and just play some things out first before you actually trade with real money, right? That's the process that you need to follow first before you jump into this, and give yourself that chance to learn it, and it'll just make things that much better. Trend is very simple. Now you guys know how to identify trend. The only thing you need is the 50, the 100, and the 200. Listen, you can learn everything about the markets. There are tons of indicators. You really can go down the rabbit hole. But I will tell you this, you want to keep this as simple as possible. You have to find what works for you. There are a lot of people out there who are Fibonacci traders, and they excel at that. And the fibs are great, right? That's a whole nother concept. There are a lot of people out there who use the visible range volume profile, which I love. There are a lot of people who swear by the moving averages, which I do. There's so much out there, but you want to keep it focused and simple. And really, it's about identifying the trend and then having maybe one or two other indicators that help confirm things for you. But you now know how to identify that trend using those moving averages. And for your entry, when it comes to your investments, for your recurring buys, you're just setting those up. Those are happening automatically, unless you want to take that into your hands and wait monthly to say, all right, this is at a spot where I want to buy, and execute those recurring buys on your own. You could do that. Or for your entry with your dry powder, you're waiting to get below that 200. You're waiting for that big moment where everybody's fearful and you're not. You're sitting back there like this, like mad professor. And then you're putting that money to work. And those big runs that we saw on NVIDIA, Amazon, I hope that you get to take advantage of one of those, right? That's related to your entry. Or for your swing trades, waiting for those stocks and bullish trends to pull back to the 15 100 and wait for that bear candle to close above the 10 and then take your trade. Your risk, how much are you willing to lose with every trade, and defining that in advance, calculating the number of shares for every trade that you take. For your investments, your risk is knowing, all right, monthly, how much can I allocate and put away money that is discretionary, that I don't need, that I want to grow over time. And risk being, I'm only putting my money in companies that I know are going to be around. I'm not putting them in Chewy. I don't mean to keep picking on Chewy. And then time frame, right? With our investments, 5 years, 10 years, 15 years, 20 years, I don't know, 30 years. Maybe these accounts are for your children or grandchildren. Or for swing trading, again, a few days, a couple weeks, a couple months. Everything fits into these 5 categories that we've covered here this evening. And so the last thing that I wanted to show, this is just a few quick screenshots. This is from Robinhood. You can do this right on your phone. And so I pulled this up. There's a button that says set up a recurring buy in your account. So you obviously have to open a Robinhood account first. Super easy to use, great place to get started. And the first thing it prompts you, find your investment. So I just typed in the SPY, right? S&P 500 ETF, right? Clicked on it. Then it says choose frequency for the recurring buy when you want to buy. And it's weird. It said on the 9th, like for every month on the 9th. And I tried to find where you can customize it. I didn't see it. I'm sure that you can, but I didn't see it. And then you put in your dollar amount, continue, submit, and then it'll do that for you every month. So that is a set it and forget it approach that you can use for your recurring buys. Very, very simple to do. And even if it's not Robinhood, if it's E-Trade, if it's Webull, if it's Schwab, if it's Interact, you could set up recurring buys anywhere. You're just going to have to do a little bit of homework to figure out how to do it. These options are out there for you guys. All right. So what you now have is a real foundation, right? I feel confident that you have the basics enough to read charts. You can identify trends. You can use moving averages correctly. You can build a plan for investing in swing trading, and you can avoid some of the beginner mistakes. And here's what separates people. It's not information, right? You have the information, the foundational information that you need. And there's a ton of information out there. But what it comes down to now is the execution component. And when you're actually in the arena doing this, the consistency, the following the rules part, which is the hardest part, the discipline, the mental game. Trading is really all up here and here in your heart. And that might sound cliche, but it's true, because the emotions are a strong thing when you're not just in a losing trade, but in a winning trade. And it can impact you to where that overconfidence sets in. And that could be just as dangerous as losing your confidence from losing trades. So consistency, risk management, just having the feedback to know, all right, is this working? What am I doing right or wrong here? And most people don't fail because they don't know. They fail because they improvise and they don't follow a set of rules. You know, there's so much that we didn't cover here, and I wanted to cover so much more with you guys, but there is just way too much. So some of the things that we didn't fully dive into this week, we didn't get into the taxes piece, building a rules-based watch list or a trading plan. That's something that I encourage everybody to do, is to build a trading plan. And actually, I'm going to share with you guys the trading psychology class that I taught back in November, and I'll put that in the email tomorrow. That teaches you how to set up a trading plan. So I would strongly encourage you to check that out. That is super helpful. And a lot of you asked me about sector rotation, market cycles. We didn't get into that. Refining entries, day trading, options. There's just so much. And that's the difference between understanding versus skill and repetition. So there was just so much. And so know that I did try to fit everything in here.